What's up guys, it's Sam here. Today we're going to be going all in on one of my favorite stocks, what makes it tick, why I'm buying it, where it's going in the future, and just all about their business in great detail. So before we do that, just remember we're not financial advisors by any means at all, and do not take this as financial advice. It's for education and entertainment purposes only. And also remember to hit the like button, hit the subscribe button. It really helps us out in the YouTube algorithm, and it really boosts our channel for the future. So without further ado, let's go straight into Magna International. Here we can see a little snapshot of what Magna is. So Magna have sales predicted for 2021 of over 40 billion. They have 158,000 employees. They're present in over 28 countries. They have 50 plus customers, 347 facilities, and they're the world's third largest supplier of automobile goods. So like, as you can see from here, Magna are a very multinational company. They're a huge company by employee numbers, and they're present all over the world. So these are a lot of the factors that make it such a compelling stock to me, and why I'm picking Magna as one of my stocks to go for the next few years. And we're going to get more into more detail of why I think this. Magna is a company that's really driving change. They're getting involved in electrification, autonomy, new mobility, and connectivity. So they're well positioned to create the cars of the future that all these brands are making, like from Toyota to Honda to Fisker to Apple. Magna is there on the sidelines providing all of the tech, the infrastructure to help meet the needs of these larger automobiles and also these startups. And as well, with Apple trying to get into the car market, Magna are the rumored people that they're going to be going with. So they're perfectly positioned to do the electrification, to do the autonomy, to create the new mobility and the connectivity, all for Apple. So that's why it makes Magna a great pick and a great company to go forward with. Here we can see what the power of Magna is and a lot of the products that they are involved in. So you can see that they are complete vehicle manufacturers. They make integrated systems. They make the seating, the mirrors, the bodies, the powertrains, the mechatronics, the lighting, exteriors, and complete vehicles. Like, they really do everything across the board. You think of a car part and Magna are there to make it. That's what makes them so adaptable to different situations, different contract orders, and different types of business that they can get from the larger automobile creators, such as I said, the Toyotas, the Hondas. They will come to them if they want a series of mirrors made and they want it made in Asia, or they want it made in North America. They can contact Magna and they will be there to fulfill that order. Don't take that as something that will happen. It's just an example of what they can do. Here we can see Magna's entire portfolio of products and services they provide. So they're well future ready to take the transitions from ICE vehicles to EV vehicles. They do everything from the power electronics in EV to the e-drive train, the battery packs, and as you can see, they do everything in between. And that's the difference. The difference between the ICE is the engine systems, the exhaust regulation components, and the transmission. So they can make the change from ICE to EV extremely easily. One of the highest growth areas for Magna is in electrification. Here we can see they're going from 2020 to 2023 to 2027. The growth is absolutely crazy from where we are right now to where we're going to be. As you can see from the chart, it's one of the fastest growing areas as they make the successful transition from ICE vehicles to electric vehicles. So, as you can see, they're well positioned to capture the growing EV opportunity. They're advancing all across the board to create a higher addressable market, increase vehicle content, whether it be from ICE to EV is increased over 150% in take rate, and also the average CPV increases from 900 to 1100, which is a 22% increase, which is absolutely crazy. So this is really positive for Magna as they take more and more of the EV market under their wing as they move from ICE to EV, and this transition over the next decade is going to be absolutely crazy. So it's definitely something that we all need to be concentrating on when looking at a stock like Magna. The global production network of Magna is all over the world. We know that from they have so many facilities, but here's just an example that they have well established in Central Europe, Eastern Europe, and Asia. You can just see a picture of how large and the scale of their factories is. It's absolutely crazy, and they're going to be making more in North America as well as they grow their footprint there. So it's great to see what these factories actually look like and the size of them and what they actually do and what their potential scaling ability is as the EV stuff comes in. So we're moving now onto their 5-year performance. They've average weighted sales growth of around 6% over the last 5 years, and that obviously took a hit in 2020 as the automotive industry slowed down. Apart from obviously like Tesla and NIO, they all flew. But the automotive generally slowed down in 2020 as the whole world ground to a halt. The return of capital to shareholders is very, very important through share buybacks and also through dividends. They've constantly been increasing their dividend over the last few years. They've reinvested over 12.5 billion back into their business, into R&D, into buying new plants, into creating a larger customer base, which is absolutely great to see as well. They've total shareholder return is 100% compared to a peer average of 35% too. So all of this is extremely positive for Magna over the last 5 years. But look, the past is not a representation of what can happen in the future. Here we can dive into Magna's debt and how they're managing it and the way they're repaying it and how they're situated to pay it off as well. So they have a total cash position of 3.5 billion with credit lines totaling up to 7 billion. So you can see here from 2021 to 2022, they have a payments of 129 million to 365 million, increasing to 722 million to 760 to 2024, 647 to 2025, and then 1,479 million therefore after. So like they're well able to actually clear this debt right now. If they wanted to, they're in the cash position where it doesn't leave them too liable, which is an extremely positive thing to see when looking at a company. You don't want to see someone that's completely debt ridden and they're not able to pay it off. So they can do that, but I know they won't, but they can do it if push came to shove, which is good to see. Their operational highlights were continued operational excellence and higher earnings, driving strong cash generation. They extended maturity on the date of 2.6 billion of a revolving credit facility by 2 years until June 2026. So they deferred some more debt off, which is it helps probably in the situation that they were in over the last year. Probably just streamlining their business and making sure they survived the pandemic. So a lot of this stuff can be understood. But yeah, they're in a great financial position and a great debt position. Magna's capital allocation priorities. So they're looking to maintain a strong balance sheet, invest for growth, and return capital to shareholders. A lot of this stuff is what we've already kind of touched on. They're looking to grow through the EV boom and take on as much work as they possibly can through that areas. They're returning capital to share buyback programs and also for increasing their dividend. So they're constantly going to be returning capital to their shareholders, which is extremely positive, and they need to maintain a strong balance sheet to keep their cash flows really well, keep the debt down, and just really invest more into the company for organic and inorganic growth opportunities that come their way. And look, as we've talked about, they're perfectly positioned to take a lot of this market from a lot of these EV startups. Like I think Fisker is the only one that's come out so far, but I wouldn't be surprised if they keep more and more of these things keep popping up as the startups that don't have the industrial size to be able to start rolling cars like off the product line. They're going to be coming to companies like Magna, and hopefully they can take as much market share as they possibly can. Here we get into Q1 2021, where Magna reported really good numbers when it's year-over-year data. So 8.7 billion was reported in 2020 compared to 10.2 billion in 2021. This is an 18% increase, which is really well. So that's not the key thing that we're looking for. So here we're actually looking at is the profitability that they've managed to turn around in the same period of time. So they've increased 91% in profitability from 403 million to 770 million, which is absolutely crazy. It's a great increase. And also on adjusted EPS, they've increased it from 0.86 cents per share to 1.86 cents per share, which is absolutely crazy. Their free cash flow is also excellent at 336 million, increased to 414 million. So it's an increase of 13%, and that we expect that when we see the Q2 year-over-year data, it's going to be absolutely crazy when you see the increase because of the slowdown that came in Q2 of 2020. It's going to be absolutely crazy. So these numbers are absolutely fantastic. Their growth rate is absolutely crazy, and we'll come to that later in the video on how that's impacting the share price. Here we can see the 2021 outlook for Magna. As they reported their earnings, they actually increased guidance for the rest of the year. So it's going to be coming in between 40 to 41.8 billion for the year, which is an increase of around 30% from last year, which is really good because they're coming back to their pre-pandemic levels. And then for the years after, you can see in the 2023 they're going to be coming at 43 to 45 billion for the year, for the year, which is it's a slowdown in growth, but it's bringing them back to their normal kind of growth levels where it was between that probably 5 to 6 to 7% every year. So there's a high growth coming in from this year, and they really streamlined their entire company with the way the pandemic hit. A lot of these companies have become a lot more efficient with having less employees, which is it's extremely good to see, because they can do it with less employees and less overhead costs. So that can be reported in the profitability of the company. So that's increased massively from where it was last year when the pandemic hit. So it's obviously great to see the outlook for the rest of the year and for the years to come. So Magna is one of these stocks where they're a mix between a high growth and a high value stock. So you're kind of getting the best of both worlds here. So you're seeing a company that's increasing their revenues between 6 to 10% nearly every year. As you can see here, they're going from 32.6 billion in 2020 to 43 to 45 in 2023. And then onto the future, they're going to continue to grow as they take full advantage of this EV boom. They're going to be evolving their portfolio to have lots of different products. As you can see, they're going to have positive impact aligned with their strategy and negative impact. So a lot of these negative impact ones are going to be things related to ICE vehicles, that kind of stuff. And they're also trying to look at returning as much capital to shareholders as possible. So they're going to accelerate deployment of capital towards high growth areas such as electrification and EVs all around. They're going to drive operational excellence, unlock new business models and markets as well. So look, they're really well set up, and with this company you're 100% getting a company that is going to be of good value and a good growth stock over the next few years. Here we're just going to get into what you can see. The segment sales, the adjusted EBITDA margins, they're all going to be increasing over the next few years in bodies, structures, power, vision, seating systems and complete vehicles. So I'm just going to bring you to show you what some of the vehicles that they are going to be getting involved in over the next year. In North America, you can see some new launches here. With Jeep, Ford, Chevrolet, Toyota, Honda Civic, GMC. So they're going to be working on all of these. We're working with all of these brands and all of these cars, and whether it just be for body, power, seating, you can see it here. So this is what the selection that's going into North America. Europe is kind of the same situation. They're working with BMW, Volkswagen, Mercedes, Skoda, and Peugeot. So they work with all the big brands all around the world. I know it's kind of centralized more, so these are all European brands. The other ones are more American brands. And then as you kind of go to Asia as well, they're also there with the Ford Mustang, the electric one, which is extremely cool looking, one that I would definitely be interested in getting if I had enough money for it. You have the Honda Civic, the Audi A7, Mercedes C-Class. So you can just see a lot about the brands that they work with and the work that they do on bodies, power, seating, all that kind of stuff. So now we're just going to go into the valuation of Magna. So they've been kind of varying in the price range between 95 to just over 100 over the last while. So it's about 28 billion market cap to 32 billion market cap. So the price isn't crazy when you're thinking about what their revenue is. Their revenue this year is hopefully going to come in at around the 40 to 41 billion mark. Their market cap is currently at 29.68 billion as of the recording of this. Their trading PE is 26.59. Their forward PE is 10, which is absolutely crazy. It's so cheap compared to a lot of the rest of the markets, and their PEG ratio is well under 1. The price of sales is under 1. It's just a very good value stock, in my opinion. The market's generally trading at over 24 PE, which is double what this stock is trading at, and like they're only on their route to profitability now. Their current year, they're expected to grow by 25.5%. I know there's going to be a slowdown as we go to 7.8% in the following year after that, but the valuation of this stock will come into play over time, and it's definitely one to consider adding to your portfolio if you like a value stock which has a combination of growth as well. So look guys, that brings us to the end of the video here today. I hope you enjoyed this, and I hope you got a lot of value for it and you're considering possibly adding this stock to your portfolio. Let us know in the comments down below. Don't forget to check out our free Discord as well, and just hit the like button and hit the subscribe button, and just remember, we're not financial advisors, and we'll see you in the next one.